Today, I'm with a certified options assassin, Casey Stubbs, the creator of Freedom Income Options. This is a guy with 9 kids, a packed schedule, and a system designed to turn weekly options premiums into real cash flow. We're breaking down his exact playbook: cash secured puts, 45-day entries, 50% profit targets, timing the VIX, and position sizing so you're never overexposed, just consistently paid. So if replacing your paycheck with options premium sounds good to you, lock in. Casey's going to give us a real actionable strategy right now. Here is my conversation with Casey.
All right, everybody. I am here with my man, Casey Stubbs. We go way back. Casey and I did a couple different events together. Casey interviewed me a couple times for his interviews. Tell me, Casey, you still doing those?
Yeah, I started back in 2018 and I'm still rolling strong. The podcast has been great. I love meeting people, asking questions, learning about the markets. And so the more people you can learn from, the better.
Awesome. First of all, what's the name of the podcast again?
It is called Replace Your Income with Options.
Oh, okay. All right. Because that's a little different from the ones we did
I've
together.
rebranded like 3 times.
Okay.
It started out as cash flow hacking, and then it adjusted to how to trade it, and now it's Replace Your Income with Options. Same podcast, just different name.
Awesome. We're going to talk a lot about that in a few minutes. So before we start talking about trading, remind me again, how many children do you have?
Well, I got 9 kids. The oldest is 26 and the youngest is 12.
That is remarkable. You have a tribe, my friend.
I do, and that's one of the great things about how I trade. Gives me the time to do what I need to do. Like today, I spent quite a few hours taking my kids to doctor's appointments, and then dropping off at school. And after this, I'm going to pick up basketball practice. It's just like, it's never ending.
It must be never ending. And they're all at home?
Yep. Oh, the oldest ones are not anymore, but 7 right now.
Wow. You get an award for that, my man. You get an award for that, you and your wife. So tell us about how you got into trading. What's your origin story? Like, what was the spark that set it off for you?
Well, I started out as a youngster. 16 is when I started, which you're not actually allowed to have an account. So I was trading on my dad's account. But what happened was my dad was an older guy. And in the 80s, when I grew up, computers were brand new. And they just started trading online. Online trading, I don't remember exactly when it launched, but somewhere in the early 90s.
Early 90s,
and my dad, he bought a computer and he wanted to do it because he was always looking up the quotes in the paper and calling on the phone. And he bought the computer. He's like, I don't know what I'm doing. Help me to use this computer. And so I showed him how to use the computer. And then at the same time, I'm like, wow, this stock thing's pretty cool. So as a young guy, I'm like, oh man, I'm going to get rich doing this. I'm thinking, I'm like, my dad, I'm like, you don't know what you're doing. You're making all these mistakes. You're terrible. I can do much better. So I'm like, as a 16-year-old, you know how teenagers are, right? They think they know everything. I thought I was going to rule the world. And little did I know that it was it wasn't as easy as I thought it was going to be.
Sure. I remember those days. Can you imagine the stockbrokers had a lock just on price quotes? If you wanted to know the price of your stock, you had to look it up in the paper back then.
It's amazing. Right after
today.
And that was like the next day you'd find the price. It's crazy.
Right, exactly. It's already old information. So what happened from there?
Well, from there, I joined the military, and the very first thing when I turned 18, as I opened up my first account, which was E-Trade, and that was in 1996, and I just started loading up my account. I was making $200 a week. We talk about inflation, right? So I was making $200 a week, and I was putting everything in. I was putting it all in, all 200. Maybe a little bit, because in the Army, they pay for your food, they pay for your house. All my buddies, they're like buying DVD players, they're going out to eat. they're buying fur coats or whatever, just they got money. They don't know what to do with it, and everybody thought I was broke. They'd stop by my room and we get these old wool blankets. They're like scratchy on your skin and
Yeah, I remember those army blankets.
they're uncomfortable, but that's what I use. And so the guys were like, oh man, they feel bad for me and they'd start giving me stuff. They'd give me clothes. They'd bring a comforter by my room and give it to me. I'm like, look, I'm not broke. Little did they know, that I had all this money in the stock account.
And how'd that go?
Well, it worked out great. And it's amazing to see how you have to invest now. You absolutely have to. And that's why I do what I do is I'm trying to teach people because the young people still don't know about it, even though times are rough right now with inflation. My first apartment was $350 a month in rent. Just kind of shows you how inflation was. That was like in 2000. So $350, now you can't get an apartment for like less than
25 or three grand, depending on where you are.
So inflation, they'll say, oh, it was twice as much. I'm saying it's like 3 or 4 times. That $30K was probably worth like $100K in today's money.
I think prices are like double from where they were 7 or 8 years ago.
Yeah. So you got to invest. It's the only way to keep up with this stuff. It's the only way.
Exactly. So now you're doing options now. What your podcast is called?
Replace Your Income with Options.
Replace Your Income with Options. When did options show up on the scene?
Well, I've been trading options for a long time. The thing was with me is I've been doing a lot of different things and kind of all over the place. So I'd say 5 years ago, I was like, okay, I'm just going to laser in on just one thing. And maybe not quite 5 years ago, but just liquidating and just moving over to options, just focusing on one strategy, one thing. Keep it simple and not try to spread myself out too much and do other things. So it's been really helpful to kind of remove the rest of the noise and to focus.
Right. So all these years, did you have a mentor?
I've had a lot of different mentors. I've signed up for coaching services. I read a lot of books. The people I interview in my podcast are my mentors, right? And that's one of the great things about a podcast is that it gets you the ability to get in front of people that normally you wouldn't be able to get in front of, right? Because you can reach out. You might have one listener in your audience, and you can reach out to like the top options trader and be like, hey, you want to be on my podcast? And they're going to say yes, even if you don't have any listeners. So it really gives you an opportunity to learn from really smart people.
Yeah, absolutely. So, I guess start telling us about your current strategy, how it works, and what do you see people doing with it? Tell us some success stories.
Well, really what I focus on is trying to build consistent cash flow. And so the idea is to not necessarily be in front of your charts all the time. And so with options trading, you can sell and collect premium on an option. And all you have to do is pick a stock that you like, and you don't really have to focus too much on chart action. You just choose a strike price that's out of the money, and you try to collect your premium, which your premium is the cash that you're getting for selling the option. And you just do that on a weekly basis. And the idea is to try to get 1%. And 1% is
1% a week.
Yeah, 1% a week. And that's not a ton of money, right? And a lot of people kind of overlook that. They're like, oh, if you put in $100, that's $1. And I mean, that's just not exciting, right? And it's not.
Yeah, but if you compound it out over a year.
And that's the thing is if you can be consistent and it's as boring as it is, it works out really well.
Interesting. What stocks do you find work the best for this? I mean, obviously, it'd be great if a stock just stayed the same price or went up. That would be the best case scenario. You want to choose stocks that are not going to lose value, but they do need to have a little bit of volatility, right? Because the the premium is higher when a stock has more volatility.
Yes, that's you're on to the secret of what I do, and that is you want stocks that have a good volatility, which means they move a lot, and so you get a higher credit for that. And then there are stocks, and we also do indexes too. And so if you look back over the last 15 years, since 2010, 2009, we're really essentially in a bull market. I mean, we've had like 22 was down, 20 had the big COVID dip. This year had a big dip, but for the most part, we've been almost going straight up. And so this strategy's worked for almost 15 years in a row.
Right.
Yeah. So find the indexes, find the strong stocks. They just keep going up, and just keep doing it until it stops working. But there's a little secret here for people that know anything about options, or if you're interested, that is follow the VIX, right? And so when I'm trading, I keep a lot of capital available. So I only trade about 25% of my capital at all times. And the reason I do that is because if the VIX spikes, then I can add more money to my trades, right? So if the market dips and the VIX goes up, you have capital to continue to invest. If you're totally maxed out and the market dips, you're in big trouble because you can't add later. And when the VIX goes up, you make double the money, right? So if you're trading most of the time, the VIX is like 15 or whatever, you're making a small credit. But if the VIX spikes, your premium is just way, way, way better. And so you can make up those losses.
Okay. So when you're saying that your underlying position may go down, but those premiums expand when you have like an event with like a quick dip down. Is that what you're saying? Because so like the VIX right now, I've been watching it. It's again extremely low. Surprisingly, may have had like a little bit of a move up today, as a matter of fact. Maybe I don't know, 3 or 4% today. It had a little bit of a move up. When the market goes into kind of like an unexpected or a very quick sell-off, the VIX, which is the volatility index, can spike. And really what it's measuring is how many people are buying puts versus calls.
Right.
I mean, if you really examine what the VIX is.
Yes.
So, but from what I hear you saying, and it makes sense, that options premiums tend to go up when the VIX goes up.
Yes.
So you can get more for selling calls against an underlying position when the VIX spikes.
That's exactly what I'm saying. And so when you receive those credits, so we'll just say that we're selling puts on NVIDIA, right? And we're selling puts, and
so you're selling puts. You're not selling calls?
I do both. I primarily puts because I don't like to take possession of the stock. I want to just keep the cash and then collect premium. So if you sell a put, you collect premium. You don't have to buy the stock. But if
but what if it gets put to you?
Then I sell calls after I own it, right? Yeah. So I mean, the way I like to describe it, and I'll get to answer your question, but I got sidetracked. I say when you lose, when you win, you win, and when you lose, you win. That's a good strategy because when you sell a put,
I like that strategy.
When you sell a put, you make money either way. You literally will always keep that premium. It can never be taken away from you unless you sell it, right? Because if it expires worthless, you're going to keep money on it. And so it's a win because you have to buy the stock, right? So you're buying a stock that
you have to really love the stock.
You really love the stock, right? Yeah. It's like your favorite stock, Apple or whatever.
Not my favorite stock, but
well, I should know.
It is a stock that
I should have.
It's funny you mentioned that one.
I should have known that was a blunder. I should have known. You're like
well, it's hard to trade on a Mac.
You're like me, man.
It's hard to trade on a Mac.
I can't stand apples. I've never owned an Apple product, and I sell trading products, right? Like indicators and that. They're like, I want to use this on a Mac. I'm like, get lost.
A lot of times, especially if you're using like Ninja-Trader.
Right.
TradeStation desktop doesn't run on Mac. You have to use their web-based version. But let's just. So I mean, my understanding is when you sell puts, naked puts are the riskiest position that you can have when it comes to options because you have to have enough money in your account or at least margin to purchase the underlying stock. And if you're trading NVIDIA, which is, what is it, like 198 in the high 190s right now, maybe over 200, that can be a lot of money that you need to keep in the account to be able to buy it in case it gets put to you. I mean, I guess if you're selling calls, obviously you need to own the underlying stock as well.
And that is the drawback, right? And I don't call them naked puts, and they might mean the same thing. I call them cash secured, which just means that you have to have the money. I guess the difference is with a naked put, you don't have the money. You're like using margin, which I don't do, right? If I don't have the money, I'm not doing it.
Okay. So you have 100% of the cash, not just the buying power.
Yeah. And so the secret for that is you got to find lower costing stuff. And you could look at ETFs. You know, NVIDIA has several ETFs that are trading like in the $15, $20 areas. You can use those. And they give you pretty good premium too.
Are you looking at like aren't there like 2 times NVIDIA?
You know, the one that I have been trading recently was called NVDX, and yeah, it's a 2x NVIDIA, and it was only, the last time I traded, it was only like 20 something. And so
that brings up the question, I would imagine those are a lot more volatile. Obviously, they're multipliers. So you're probably getting more premium for those, but you got to catch it in the right direction.
Right. Yeah, you got to catch it in the right direction. And if you are okay with holding it, right, if you are really confident in NVIDIA, it doesn't follow 100%, but it follows it pretty good. And the Tesla has one. I mean, most of the big, you know, the Mag 7 stocks or whatever, they all have those. And so you can find them. And also great companies that are up and coming companies. You can find some good lower costing companies. One of the big ones that I've been trading all year long, and I just never lose on the trade, is the SoFi. And it's only trading at like 27 right now, and it just keeps going up, and it's just they give you good premium. It's low costing. It only costs you $2,700 in your account to collect premium on that. So it's not a lot of capital needed to trade that.
So the formula to you, if I hear you right, is you want to have a lower priced underlying stock or an ETF, depending on the price of the ETF, because ETF could be a lot cheaper than stock, obviously. And then you want to look for ones where you collect at least 1% a week.
Yeah, that's primarily the goal, and keep cash in your account so that and the average is 1%. So when the volatility is up, your premiums are a little bit better. And like you said, it is up a little bit over the last, if you look at the VIX, since October, the end of October, it's been slowly creeping its way up. It was 15 and now it's 19. It's just a little bit higher every day. And so as the market, we'll see what the market does, but right now it's kind of leaning like there's a little bit of fear in the markets.
Okay. Now, will you buy back these puts if, let's say, what day do you sell the puts?
So
on?
I like to go 45 days out, and so I will put a profit target automatically at 50%. And the reason I do that is because I want to keep my cash flow rolling, right? So as soon as the sooner I can get out of the trade and get more cash, the more I can compound it. And it also increases my winning percentage tremendously I take profit early, and it also helps me to avoid getting assignment, which I don't like as much.
Okay. And do you find you have like an average period of time that it takes to get to that 50%?
No. Sometimes it happens, not that I've been able to pick it up, but sometimes it happens really quick. Sometimes if you get a good stock, you can do it in a couple days, 1 or 2 days, which is so fun. And then other times it takes a while. And it depends on what the stock movement does. So if the stock spikes, you can get out really fast.
And if the stock starts going against you, do you have a stop loss strategy?
I don't stop out unless I get nothing manual or automated. I might take a manual stop. but only if it's like bad news, because I'm usually only doing this in
Okay.
something that I'd be cool with owning.
You want to own the
Yeah.
stock. You're okay owning the
Yeah.
stock. So you're part of your strategy is you have to be okay owning the
Right.
stock.
It's like I do my fundamental analysis, good companies, up and coming growth, positive earnings, that kind of stuff.
Gotcha. So why, out of curiosity, because I do sell calls against some larger positions that I'm in charge of managing, and some bigger positions in Google and in Amazon and Meta. And I mean, at least the positions are owned by the account, and the cost base, I mean, they've been owned for many, many years. So we're selling calls to generate income.
Right.
And what I've been doing is doing the weeklies and really like anywhere from 5 to like 10 days out from expiration. It's not a lot of money, but I'm able to do it every week.
Right.
What's the difference between the 45 days like you're doing?
So I like weeklies as well, but I don't do them as much, primarily because it takes a little more energy. Right. So I
Yes.
only have to get
Yeah, every week. I'm thinking about it a lot. That's for sure.
like I'm just trying to get in and not mess with it. So I want to, one of my
okay.
marketing strategies when I'm teaching people is I say, replace your income in only an hour a week, right? And so literally I place one trade on a Monday with my people, and then they don't see me again till next Monday, right? I mean, that's
Okay.
it. It's really simple. And so you do get a little bit more credit when you go further out because
Right.
of the time, but you make more money
does
if you do
seem-
weekly because you can compound that.
Yes.
So I tell people with small accounts that want to bump up and make money fast, do the weekly. You learn experience, you learn how to manage trades, you learn everything you need to know. But if you're trying to save time, go with longer.
And to be honest, it's been a little challenging with Google because it had a very big move up recently. One trade I had to take a little loss on because the thing just ran so fast, and I didn't even do it the week of earnings, which was what,
That was
last week or
smart.
the week before. Because I think you never want to do it over earnings because you never know what can happen.
Yeah.
And we don't want to lose the stock. That's the thing.
Right. If you hold it and you got a ton of profit on it already, then you definitely don't want to lose it. So then sometimes if you're selling a call, you got to take a loss. And that's just like, that's horrible.
I did that
that's
one
awful.
time and it hurt. It hurt.
Yeah.
It stung. It wiped out several weeks of premium we had collected.
And that does happen sometimes because we got really high win rates. And so when you take a loss, it usually hurts because you're making small premiums. And then when you take a loss, it does hurt. But you just got to really keep focusing on the big picture.
Now, don't you get afraid of a market crash? I mean, like, so for example, when COVID hit, we dropped 35% in 7 weeks. Like I had never seen that happen. And I've been watching stocks since 94. And so that sell-off was the fastest, I think, in history. Don't you get scared? I mean, you could really get put a lot of stock and be hurt.
Well, I don't know if this year was comparable, with the tariff.
It was fast.
The tariff drop was comparable.
It wasn't 35%.
And it didn't.
I think it was close to 20.
Yeah,
though.
and it didn't last long, but the COVID one didn't either. The thing is with me is because I'm 25%, 75% is available. I'm not too worried about it because if I do take the assignment, I still got 75% in cash, and I don't mind buying in at better levels. And if I buy in at better levels and the market keeps going down, we're talking like a 5-year bear market. Then I'll just sell calls on them.
We have not seen a 5-year bear market since I've been involved with Wall Street, going back to 1992.
Wait, what about 2000?
2000. So first of all, the low in 1998, the NASDAQ was around 1325 or 1275.
Yeah.
And the high 18 months later was 5,200. It tripled during that
Right.
period. And then the market, we did drop about close to 80%. The low was in March of 03. So that was a 3-year bear market, or let's call that 2 rather. And it bottomed, and it took some time to get any trajectory going again. But then it did kind of start to really wake up. But that was very, very painful. And that was the most extended I saw. But it wasn't 5 years. But I didn't know what I know now back then.
Right.
For me, I really got my clock cleaned. I had been a stockbroker since the early 90s. Everyone knows me as the trading computer guy. I was a tech guy. I was only buying big name tech stocks. So I always tell people, the worst thing that can happen to you in trading is you make money right out of the gate, because you get cocky, you get arrogant, and you're a little bit doomed to have that one time where you really get your bell rung. And for me, I think my version of that was the most exaggerated ever, because I was just in the right place at the right time. I didn't really know what I was doing. And it lasted like 8 years. 8 years, I was the smartest guy in the room. And then I really got my bell rung.
In 2000.
In 2000.
Yeah.
Yeah. And that's when I really learned how to trade. I never heard of a stop loss before then.
Yeah. Yeah. Well, that's the thing, is even though it was a big drop in 2000, like you said, it still didn't go back to where it was.
Yeah, it took, I want to say the NASDAQ didn't get back to 5,000 until like 2011 or something.
Yeah. So that was a
Way
big bear
later.
market. That was huge.
It was huge. If you go from high to high, yes. I guess if you want to compare it to the 70s, I think it was the high. I want to say the high was in 68 or 9, and then we didn't get through the high in the Dow again for 10 years. I guess if you want to look at it from high point to high point, there is some similarity there. But it went down to, I think it was 1175 or 1275, forget that number. And then in 08, it went back down to almost the same number.
Yeah.
Down again to that same number. It's pretty hard to believe how the number on the NASDAQ now, we're at 24 and change.
Yeah. And we could
like
get a
that.
huge drop. And for me, where I'm at, so you really have to take a look at where you're at age-wise and, when you need the money or whatever. So I'm still young. I'm very young. And so
you got some kids to put through college.
So I got time. I'm just going to keep chugging away. The only way to really avoid those types of things, and I can start selling these on the bear side too, to try to keep the premium going. If I see the market like, oh, okay, this thing's going to be extended, I'll just reverse the strategy and start selling it. But really the only way to avoid it completely is to do like swing trades where you've got a stop and then you start selling short, things like that.
Right. I love the strategy. I've given it so much thought over the years, and for me, it feels like it's so great. You have this high win percentage until, God forbid, something horrible happens, like the COVID dump, which would have worked out. You would have been put the best stocks, and they all within 6 months were higher.
Right. And same with this year, the tariffs too. Same thing.
Right.
Yeah.
A lot higher.
Yeah.
That's got to be real scary when you go through.
It is, but here's my outlook, right? And I'm kind of on the bullish side. I get it that we have those scary things, but I'm in my brain, I'm just a bull brain. That's me. I'm always positive. And I'm like, look at tech, man. Tech is just so cool. Tech, there's two things in my mind that drives these things. Tech is number one. You were involved from the beginning. I was a tech guy when I was a kid in the 80s. I love technology. AI stuff is exciting. Robotic stuff is exciting.
Really, really incredible.
I love what they're doing, and that tech makes money. So that's the first thing. The second thing is, with these interest rates and the availability of free money and the what is it? The inflation aspect.
$7 trillion on the sidelines.
The government just loves
amount of money
doing their magic money out of nowhere. As long as they do that, the markets are always going to go up. When they stop doing that, then we might be in trouble.
It's a good point. I mean, we're at multiples now that we've never seen before. And I totally agree with you. It's because a big part of it's because of the PPP. I still think to this day, the level of like the PE ratios, I'm not a fan of PE ratios, but if you look at the value of these stocks relative to the sales, historically, it's at levels we've never seen before.
I saw something yesterday that said Palantir was like 456.
It's the valuation is so out of control on Palantir. Yeah. I think that's why David Blurry, the big short guy, Michael Blurry, put on that big position.
Yeah.
But sometimes when that happens, you get so many people short the stock that the stock can't go down,
right?
Because there's just so much support in it from people. The only way to unload that short position is to buy it back.
So they when they buy those, when they cover those shares, the thing just launches.
Exactly. That sometimes, I mean, it really doesn't work.
Sometimes they're forced to cover, and then that's even worse.
Even worse. I mean, you make good points, and I do agree with you about tech. I'm a tech guy. AI and robotics, those really are the two biggest opportunities going forward. And it is remarkable. And it seems like it's kind of hard to totally wrap your head around it because AI is improving so quickly. I think we're all a little like scared because it's hard to see what's around the corner. And so I use it for like video editing. And the way video editing has improved just in the last 12 months is mind-blowing. It's absolutely mind-blowing. 2 years ago, what would take me like a whole day to edit an 8-minute video I put on YouTube, I can now be done in under 45 minutes. It's that much of a difference. And you can put in like background videos. You can do AI avatars and voiceovers that look so realistic. It's just, and anybody can do this. It's not even difficult to do. And if you use like ChatGPT, I mean, it's remarkable. The fear for me is that, these AI models are just kind of respinning all the BS that's on the internet.
Right.
Because its knowledge base is basically the internet.
Yeah.
And you can't possibly believe that everything online is true.
Well, yeah.
So
and they can't think, so the quality of the stuff is not as good. But you're right about the videos, and you know how you say the fear factor, like that's a big thing with my kids, right? Because they're 18, 19, getting ready to go to school, and I'm having a hard time keeping them motivated because they're like, "There's no point. All the jobs I want to do is going to be replaced by AI. Wow. My life is over." Like that's what they're saying because they feel like there's no future because AI is stealing it.
Wow. And where are they getting this narrative from?
Well, I mean, like everywhere you look, there's headlines, jobs being replaced. Amazon cuts jobs. Yeah. Walmart cuts jobs. They're investing $10 million in new robots, in
the past, that's been a kind of a story they've told since railroads, that the Industrial Revolution, that, was going to replace the iron horse, was going to replace, which was the train, was going to replace so many workers. Mm-hmm. And so many of these technologies will replace workers. But what it's always done is created other jobs, and it's helped the economy and helped the employment record. I mean, if you look historically, our unemployment rate is still, the last 10 plus years, at historically very low levels. I do think every new technology displaces workers. And it's interesting because it seems to be a lot of technology workers, like coders.
They
don't need people to coding anymore because AI can do a lot of this coding. Yeah. That's interesting. People paid $200,000 to go to school to be a coder. And now the robots are doing that. But I think there's going to be a lot more. And then in the meantime, like truckers make over $100,000 a year. Jobs, AI can't do nursing.
Right. Yeah. There are some jobs. Yeah. And nursing's in high demand, but truckers, man, they're in trouble. Because I've got a buddy that works at one of those companies. He was just telling me a couple weeks ago, he's just so impressed of what they're doing. They're building these warehouses, the trucks dock, and they've done like 150,000 miles in total driverless trips, and they're just all going well.
Wow.
He's like,
Wow.
it's a small company, and he's like, look, they're getting ready to make some big deals with some of these companies. It's going to come hitting mainstream pretty soon.
Wow. I know Tesla has like an 18-wheeler kind of like the cab.
Yeah.
Yeah.
So it's going to be big, and it's going to hurt.
I hope they drive better than truckers do. Because, man, it's scary. Some of these truckers away. You know, at least we, supposedly we test pilots before they.
What are the cops going to do? Like, they can't pull over the truck drivers because there's nobody to pull over.
That's a good question. We might have RoboCop on the side of the road. It's interesting to see where that happens, to see what happens with employment. But I mean, clearly all these tech companies are laying people off while at the same time reporting record profits.
Right. Yeah. So I don't know. I'm kind of like in the same boat as you. I'm always a believer that things are going to work out and that tech is going to open it up especially for creative people. If you're a builder, you're just going to use it to build. You're going to figure out a way to use it. It's the way I look at it, it's a tool. And I'm using it as a tool to build more cool stuff.
Right. It's so incredibly helpful. You know, I'm sitting like down and I'm trying to create like a video for my YouTube channel, and I need ideas. And if I can have like just a spark of one or two ideas, it can help me expand on those ideas very, very quickly.
Yeah.
So from that point of view, it's very helpful. But, you know, we also don't want it to replace our own ideas. And then, because people can become very lazy if they're not using their imagination. I mean, if you're a creator, your imagination is so important. And that is one. I know we're in the rabbit hole now talking about AI, which is cool.
It's a good conversation, and it impacts trading in a good way. But I agree with you again. Lazy people, this can hurt lazy people because they're not going to want to think. Right? You can use it to help you think, or you can use it to replace your mind.
Yeah, that's scary. How are you using it? What do you find to be the most useful thing?
Since I'm a content creator, I'm like you. I'm a content creator, trader. So for me, I feel like because I have been doing this my whole life, that it's like a tool and that it makes my abilities 10 times greater. And so I'm using it to help me with my content ideas, editing, graphics creation. It's helped me. I am not using as many workers either. I'm getting more done on my own, and I'm training the people who do work for me. I'm training them how to use it. So it's been very helpful. I mean, I feel like I can just get stuff done so fast. Websites up and running super fast.
So I love that, the way you're framing that. If you're a creator, it's very helpful. And I think the creators are going to wind up really being the winners, the ones who use it as a tool to create great things.
Yeah, options tools too, like scanners and stuff. You can build them like that now.
Interesting. Have you built any type of special scanners for your product?
I'm building them out right now, and it's just so simple to do with these. I'm just amazed at how good it is at coding.
It is remarkable. So tell us where people can find you.
So my website is called freedomincomeoptions.com.
freedomincomeoptions.com.
Yeah, and I've got a YouTube channel and LinkedIn, and all that information's there. You can check out any of that stuff there. And
so you have a course, you have a program. How does it work?
I have a couple different courses. I teach. My primary strategy is the cash secured put, but then I also teach credit spreads, which is a little bit higher risk. It's high probability, but it's higher risk because you can lose the full amount that you invest, but it's a defined risk. You know how much you're risking on the front end, and you can just keep your trade size low. So it's a great strategy, but I teach that. I've got a course, and then I have some coaching as well.
Awesome. What's the coaching like? Is it one-on-one? Is it group coaching?
Coaching, I am trying to teach people to replace their income. And so we get in as a group and we all talk about, what trades we're doing, how to manage them, what we're going to do next week. We review portfolios. I do a little bit of training and things like that.
Okay. Tell me your top 5 stocks right now that you're selling puts.
Top 5, Robinhood.
They just reported a great quarter, didn't
Yes. They've been really good. Robinhood, SoFi has been a really good. I mentioned them previously. Palantir has been amazing. Although now I'm
scared.
backing off. I might short it.
Okay.
Palantir's been very good. And then I really love sticking with the basics. And I don't do cash secured puts on these, but I do credit spreads, which is the SPY and the QQQ.
Okay. Do you ever, okay, you mentioned the ETFs and the multiplier ETFs, the 2 times ETFs. What about like, I know there's like the triple Qs ETF, and then there's like a triple short Qs ETF. You ever do anything with those, or pretty much the same rules would apply?
I haven't done those. Sometimes the options aren't as good on them. I think I was researching them and I couldn't get the premium I wanted. I'm always willing to look at them though, because if they follow the index, then it's probably a good deal, but I haven't been able to get the premium that I wanted.
Oh, interesting. So the goal is 1%.
Yes, sir.
1% a week.
Yes, sir.
Awesome. One more time, the website, Freedom Income?
FreedomIncomeOptions.com.
FreedomIncomeOptions.com. And what's your YouTube channel called?
Freedom Income Options.
Awesome. Well, I really appreciate you joining me today. We had a very interesting conversation. I recommend that everybody check out Casey's YouTube channel, check out his website. It's a very good strategy. Options are not a simple concept. You really have to think about what you're doing. There's like 24 different types of option strategies that are out there. And this is a way to take in money, take in real income. It's something that you should definitely look into. So Casey, I really appreciate you spending some time with me today, brother.
Thank you. I really appreciate being on. It was great.